All right, let's jump right into it. Today, we're tearing down a truly fascinating case study in operational excellence and serious market momentum. We are going to deconstruct Monarch Casino and Resort's explosive first-quarter earnings for 2026. Whether you're a hardcore follower of the gaming sector or you just love dissecting how a mid-cap company completely crushes Wall Street expectations, this explainer is going to break down exactly how Monarch pulled off this record-setting surge. Let's get into the numbers.
Here's our quick roadmap for today's explainer. First, we'll hit that record first quarter. Second, the specific drivers behind the surge. Third, the broader Colorado gaming boom. Fourth, we'll run through stock performance and valuation. And finally, analyst outlooks and potential expansions.
Boom. Just listen to this headline number. For the first quarter of 2026, Monarch generated a massive $136.55 million in net revenue. Now, in the investing world, you know it's not just about what a company makes, it's about what they make compared to what the market expects. And with this figure, Monarch actually beat Wall Street's consensus by a solid 5%.
But hey, revenue is just top-line vanity, right? Profitability is where the real magic happens. Monarch posted an adjusted EBITDA, essentially their core operational cash flow of $48.95 million. That didn't just edge past analyst estimates, it absolutely crushed them by 12%. So they aren't just pulling in more cash, they're actually keeping a much larger chunk of it.
Section 1. A record first quarter. We are seeing serious growth across the board here. This wasn't just some lucky streak at the blackjack tables. Casino revenue jumped from $72.9 million last year up to $79.7 million. Food and beverage caught a nice healthy bump to $31.7 million. And the hotel segment? That rose to $19 million. That is a 13.5% increase year over year, largely driven by having more rooms available and a major uptick in convention business at their Atlantis property.
Now here is where they really flexed their operational leverage. By dialing in their labor management and keeping expenses tight, their net income shot up almost 39%. Their EBITDA margin hit a record 35.8%, expanding by a full 3 percentage points. But honestly, the most impressive metric is the balance sheet. Zero debt. Literally nothing borrowed against their credit facility, plus a massive $120.1 million war chest in cash just sitting there, ready to deploy.
Section 2. Drivers of the surge. So, how exactly did they do it? Well, Monarch basically engineered a perfect storm. First, they finished room renovations at their Atlantis property in Reno, which let them hike their room rates by 20 to 25%. Second, and you gotta love when luck is on your side, terrible ski weather in the region meant folks skipped the slopes and stayed inside. As one analyst perfectly put it, bad ski weather is basically just good casino weather. And third, they've been aggressively rolling out new tech across their properties, which is actively driving down day-to-day operating costs. The big takeaway here is that they are actively elevating their customer base. Barry Jonas over at Truist Securities hit the nail on the head, noting that Monarch is gaining real market share at their Blackhawk property by reeling in high-value customers. And why does that matter for valuation? Because management pointed out that this high-end demographic is super insulated from macroeconomic headaches like high gas prices or inflation. It's an incredibly resilient customer base.
Section 3. The Colorado gaming boom.
Zooming out for a second, we have to remember Monarch isn't operating in a vacuum. Their Blackhawk Casino is riding a fantastic macro tailwind in the Colorado gaming sector. If we look at the statewide data for April 2026, total gaming taxes grew by 3%, and adjusted gross proceeds topped $94 million. Monarch is expertly positioned to grab a bigger slice of that growing pie, especially with favorable population shifts, like the influx of people relocating from California.
Section 4. Stock performance and valuation.
Now let's talk stock performance, because this trajectory is wild. If you were looking at Monarch back during the 2020 lows, shares were trading at around $12.66. By 2022, they were averaging around $62. Fast forward to June 2026, and we hit an all-time closing high of $129.02. That is a 10-bagger journey that screams deep market confidence in this management team's ability to execute.
And Wall Street definitely noticed. When you hit a market cap nearing $1.8 billion, you start getting serious institutional ownership. Monarch has officially landed in major funds like BlackRock's iShares Core S&P Total U.S. Stock Market ETF. That kind of heavyweight institutional backing gives the stock incredible liquidity and a very solid floor.
But as analytical investors, we always have to ask the hard question: is the stock priced for perfection? According to Value Investing's models, their estimated fair intrinsic price is around $109.25. With the stock trading up at $129, you're looking at a company trading at a distinct premium. The market isn't looking for a margin of safety here. They are actively pricing in continued outperformance.
To put a precise number on that premium, we can look at their enterprise value to EBITDA multiple, which sits at roughly 10.99x. In the regional gaming space, trading at nearly 11 times core earnings tells us one thing. Investors aren't just paying for what Monarch is today. They are paying a premium for the aggressive future growth they fully expect this team to deliver.
Section 5. Analysts' Outlook and Expansion. So what is the next catalyst? David Katz at Jefferies Equity Research makes a great point here. Strategic expansion is the obvious next step. When you have this much operating momentum and, again, absolutely zero debt, you are in the perfect position to make a big move. And Monarch's management isn't being shy about it. They've explicitly stated they are diligently hunting for potential M&A transactions.
Their playbook moving forward is actually pretty strict. Operationally, they're laser-focused on boosting midweek occupancy and cross-marketing their Reno and Colorado properties. On the M&A side, they have hard rules. They absolutely will not touch a market with legalized iGaming or online casinos, and they demand strong local population growth. They aren't just going to buy for the sake of buying, and analysts love this discipline. Jefferies actually bumped up their 2026 cash flow estimate for Monarch to a whopping $213.5 million.
Which leaves us with the multi-million-dollar question. Monarch's executives have gone on record saying they'd be willing to lever up, taking on debt up to 4 or 5 times cash flow for the right deal, and they are even sniffing around non-casino hospitality properties. So, with over $120 million in cash burning a hole in their pockets and a pristine balance sheet, what happens next? Will they deploy that capital for a massive, market-shaking acquisition, or will they just keep aggressively buying back stock and issuing special dividends to shower their shareholders with cash? It is a brilliant position to be in and absolutely a stock you want to keep on your radar. Thanks so much for joining me for this explainer.